Campbell McCreary here, Amvest Capital. Welcome to Amvest Capital Inc. live webinar with Excelsior Mining Corp. Excelsior trades on the TSX as MIN and as EXMGF on the OTCQX. We do hope you enjoy today's program. It will be available in on-demand replay about an hour and a half after we wrap up. The original link will work for that. And you can also just go to amvestcapital.com/replays and get directed to the link also. Few important things. Amvest is a New York-based specialist investment management and corporate finance firm, focuses solely on the natural resource sector. And please note, this call is most definitely for informational purposes only. Great part of this event, our events, is asking questions of management. So you can just type away in the question box and we'll get it and we'll ask the question. Here are some important links and downloads to their stock page, presentations, etc. During the show, you can share the event on LinkedIn and Twitter or email it, and they'll get it, and the link will work for the replay as well. And at the end of the show, please share your feedback over there. With that, very pleased to have with us Steve Twyrold, the CFO and president of the company, and Robert Winton, senior vice president and general manager, who will tell us about what's going on at the property. Thank you very much.
Thanks, Campbell. Thanks for that introduction. Well, welcome everybody to the Excelsior Mining presentation. As Campbell mentioned, I'm Steve Twyrold, President and CEO of the company. We've got a really good story. We're going to get through it relatively quickly so that we can get to Q&A, because I know there's a lot of questions that our audience would like to ask. So let's keep moving. These are the usual, sorry, there's a little delay. So these are the usual disclaimers regarding forward-looking statements. You know, we will be making forward-looking statements. I encourage you to get on our website and read these in more detail. We also have a lot of really good sort of technical information and other information on our website, excelsiormining.com, and it's well worth sort of typing that into Google or your browser and having a look at what we're doing. This slide, it's the highlights of the company, but it's also a proxy agenda for the rest of the presentation. We're going to be going through each of these items in more detail, so I won't cover them in detail here. We're very proud of what we've done. We believe ourselves to be the world's most environmentally friendly copper producer. We can make that statement because we're doing in-situ mining or in-situ recovery. Myself and Robert will be talking more about that, but it really is an innovative and great way to do copper oxide mining. We have a great management team. We've had some challenges. We're working through those challenges. We've demonstrated successfully navigating those issues in the past, and we're going to make this thing work. Strong financial position, great supporters, long life assets, multiple assets, and we're producing pure copper, 99.99% pure copper. The photograph you see in the background there are the copper cathode sheets that are coming off our solvent extraction plant, electrowinning plant, and that operation is running beautifully. We couldn't be happier with that. Great jurisdiction. We're down here in southern Arizona. Arizona is ranked number 2 behind Nevada in the US as the best places to do mining. So we're very happy where we are. And it's important for us because we're well integrated into the communities around us. We're well integrated, into the Arizona business community, and it makes life a lot easier. We have a multi-asset mining camp that gives us a lot of opportunities and a lot of room for upside. We've talked a little bit about that. We're going to talk more in the presentation about that. That said, our flagship is the Gunnison project, and we are highly focused on ramping that up to full production. If we ramp that up to full production, then we have the opportunity as well to add on additional production from the other assets, in particular a project we call Strong and Harris. We kind of brought that into the public domain last month. We're going to be doing some more on that this month. And we believe we're deeply undervalued. So it's a bold statement. We're not the only ones doing in situ copper recovery. It's been done before in Arizona. There are a few people doing it in Arizona today, or ramping up projects in Arizona today that are doing in situ mining. The advantages of it is that we don't move dirt, so it means we have very, very low or minimal dust, air, and sound pollution. Our water consumption is probably one of the lowest in the industry. Every pound of copper that we produce is going to have a smaller carbon footprint, a smaller water consumption, less remediation, than equivalent copper from other projects. We're sort of the leaders in the pack on this, but it's the way of the future. There's a number of sort of institutions, particularly in Australia, big companies, BHP, Anglo, etc., all working on in situ mining. They believe that in 20, 30 years, every mine's going to be mined, in situ, similar to what we're doing. We've got a jump start on that because we have a very unique deposit that allows us to do that. But it is certainly the way of the future, and we're very proud to be a leader in that. Just the management team. Again, if you get on our website, you'll see more complete bios. Roland Goodgame and myself, we've been with the company the longest. We essentially took this from concept to where we are today. We're technical. Both of us have got over 30 years mining experience. Both of us have got PhDs in chemistry and geology. So it's not often you see some of the lead management of a company is so technically focused. I will mention Robert. Robert was VP of Hudbay's Manitoba business unit, and then he went to NiStar. He joined us last year, and Robert's doing a fantastic job of leading our operations team. And Robert's going to be presenting later in this presentation. We have really good supporters. You can see some of the names there: Triple Flag, Greenstone, Altius, Kabari. I speak to these guys, regularly. They did a lot of due diligence to get into our project, and they're just fantastic people, and they're fantastic supporters. Very happy to have them, providing us finance and having regular discussions with these guys. Long-term supporters. We have about 274 million shares outstanding, fully diluted 330, trading around 40 cents US. Gives us a market cap around $100 million, $110 million US. That dilution, most of that are warrants, 33 million warrants that exercise at Canadian $1.25. They're exercisable, up to August 22 next year, and frankly, our goal is to get those options or warrants in the money before the end of next year. So we've got a strong financial position. So as at the end of June this year, we had close to $28 million US in the bank. Our burn rate around about 1.2, 1.3 million a month. So that's going to see us finish the year with a very strong cash position. We do have a $15 million loan facility via Nabari that's due in March next year. We're extremely confident. We have a great relationship with these guys. We're extremely confident that we'll be able to extend that loan facility or we'll refinance that loan facility on good terms. So, subject to us doing that, we're going to launch 22 with a strong balance sheet and a number of projects we want to get underway that will fund out of that balance sheet in 2022. It's a map. It's a map of the main part of our mining camp. We actually have another mining camp that's more primarily exploration. The big red blob, so to speak, in the middle of that's our flagship Gunnison project. As I mentioned before, we're really focused on that. We have been for many years, and we remain focused on ramping that up to full production as soon as we can. We've lost some value on that because we've had some challenges with CO2. We've been fairly public about that. We believe we've got a clear path forward to resolve that challenge, and we've resolved similar challenges in the past. So very confident, Gunnison is going to be performing as quickly as possible when we implement some of those changes. In the meantime, we've got brownfield and greenfield opportunities. Probably the brownfield opportunities that are most interesting are the ones around the Johnson Camp mine. There's a couple of pits there. At these copper prices, there's readily exposed copper oxides in the walls of those pits. And we intend to go and mine some of that to generate some cash flow next year. So, production growth, if we add to that, the projects up the north, they're called Strong and Harris and Peabody. It's, as I said, we kind of announced that to the public last month. We've got a PEA coming out on that later this month. And if we add that to sort of a fully ramped up Gunnison project, then, you can see us, we can see a pathway to 200 million pounds per year copper equivalent. That is a copper, zinc, silver asset. So in all, all these assets gives us flexibility to deliver. It gives us multiple cash flow streams. It gives us multiple commodities. It gives us room to move as we continue to work on the Gunnison ramp up. This is Gunnison. Now this, certainly in the bottom of the bottom quartile of the cash curve, cash cost curve, C1 cost curve. This includes our estimation of what we need to do to remediate the CO2, the raffinate neutralization plant, and sort of pre-production rinsing to remove the CO2. So that's included in that number, and we're still at the bottom of the cash cost curve. You can also see here, if we compare ourselves to some of our peers, our enterprise value, per resource pound, that's just Gunnison. We have a lot of other resources. And certainly, what we believe is that is a position that we can grow from and grow from strongly over the next year. So that's kind of like an introduction. I'm going to hand over to Robert now. He's going to take you through a lot more of the operational issues, and then we'll get on to Q&A. So over to you, Robert.
Thank you, Stephen. Good morning, all. So we'll start again with the flagship asset here at Excelsior. So the Gunnison asset would be the wellfield circle on this picture. So our site is halfway between Benson and Wilcox in southern Arizona, just off of I-10. So again, great access to get us to market. And again, what we're seeing here is the operation side of things, the SX-EW plant, our acid tanks, and again, some of our process ponds that are on the JCM side. So again, wellfield south of the interstate, and our operations finishing electrowinning site is north of the interstate. Also, you see over to the left of the picture, you'll see the JCM pits. So that one is Burrow, and in behind the picture would be Copper Chief. So again, initial production capacity from Gunnison is 25 million pounds per year. And what we're doing here is just sort of explaining where we're at and what that future looks like. So again, no surprise here. Copper is connected to American growth. We certainly have a great story here, as Stephen mentioned. And this was our first sale that happened earlier this year. So there is a little bit of snow in the mountains, so this was Q1 of this year. First copper leaving site from the wellfield. So a great milestone for our organization. Again, I think this is a key transition. Innovation does require a pivot. We've certainly had a significant amount of challenges come our way since we started in early 2020. And we've built a management team that has been able to identify these problems, and we've been able to deliver and understand what those solutions look like. So again, that's the sort of the goal of today's meeting, is to get you to that understanding that we've been able to achieve. Again, Gunnison, 25 million pound capacity. The wellfield commissioning has certainly been hampered by calcite. Last year, we had stories of precipitate issues. Those were resolved with some very innovative changes to our well field. We transitioned all of our wells to be able to inject and recover. Very innovative solution to a problem that was initially found in our well field. As we restarted in the summer, calcite became the significant issue. And again, calcite was certainly understood in the pre-work. Metallurgical costs are certainly in the feasibility study, which is fundamentally an acid consumption discussion. However, the negative impacts of CO2 and how they really impacted our flow rate was certainly not envisioned, and certainly became the fundamental focus of our ramp-up challenges. Again, sort of fact of life, calcite is a finite issue, and it will eventually burn off. We're dealing with secondary calcite here. These are calcite inclusions on that are near the copper on the faults through the ore body. This is not the host rock that we're talking about. So again, it's a finite problem. The solution that we've been able to find through the last 6, 7, 8 months has really been a short cycling of water, and intermittent recovery works best. So again, we're adding acid, we're recovering that acid, we're adding water to clean out CO2, and this cycling is happened. Again, we were able to have this successfully done on our first 5 spots, so that's 5 area wells, usually 1 well injecting, 4 recovering. And we've seen a significant flow rate increase in this plan. We saw about 1,000% increase, and this is in our center 5 spot, again, right in the middle of the well field. Very important part of our understanding from that initial test. We're now on our second 5 spot, and again, we're meeting our expectations, our performance. We've seen some good improvement, a couple 100% improvement in some of those wells. So that's, again, the positive is finding that problem, understanding it. It's been a long haul, and again, the solution is there. Now it's the deliver for that success. So how do we move from that, again, that planning to implementation? Again, our challenges today are our current water and evaporation infrastructure. We can only flush about 10% of our wells. So that obviously adds a significant amount of time. So the preferred path is to build a raffinate recycling plant. It's fundamentally neutralizing raffinate and flushing that through the well field to remove CO2. So again, 25 million pounds per year supplemented. And that's what Stephen mentioned. The plan is to supplement copper from our JCM pits to achieve that plant capacity of 25 million pounds. So again, the goal, we're not looking to dilute our share, so we want to build this plant with respect to JCM cash flow. We get these near-term pits on production next year, and then deliver that cash to build the neutralization plant. Also, as Stephen mentioned, our innovation and our exploration of options never stops. It never ceases. So we've got some additional technical opportunities, I'll call them, for Q1, Q2 of next year to assist and speed up the removal of CO2. There's some significant potential upside with those plans. Also, as Stephen mentioned, we are updating our 43-101 due out end of this year, first couple weeks of 2021 or 2022, sorry. And again, we're still showing an incredible net present value of $983 million. That's with the inclusion of the neutralization plant. And we've added a year of pre-rinsing on each one of those new wells as we expand this project. So again, all in life mine costs of $1.48. Significant opportunity for cash and value generation here at Excelsior. So again, while Gunnison is the flagship, we are certainly talking about and recently updated the marketplace on our other projects. We've got some significant long-term upside on the nearby assets. Again, we're about a mile north of our operating plant. We've got the Peabody, Sill, and Strong and Harris. As you see there right in the middle, right in the heart of our SXEW plant is our near-term production from the JCM pits. And then we've got other near-term assets that are in the area, small near-surface little offshoots of some of the major JCM deposits. Again, opportunity is really the name of the game here as we look for the future. So the open pits, as you see right in the middle of that picture, you've got the SXEW plant, again, our 25 million pound per annum capacity plant. You've got the Burrow pit just to the east of it, the Copper Chief to the northwest. So again, very quick opportunities, as Stephen mentioned, a lot of near surface copper in those two pits. And again, these are legacy pits that should be able to get minimal capex. And again, there's minimal permitting risk in our district within southern Arizona here. And getting a little more, diving in a little more into the Sill and Strong and Harris. So again, as I mentioned, we're just over a mile from the Johnson Camp setup. PEA has been announced and will be published here in a week and a half. We're showing an after-tax NPV of $187 million at $350, which again is a significant asset for Excelsior. Traditional open pit. Again, there's oxide and sulfide here. And as Stephen mentioned, we've got zinc, copper, and silver as part of the opportunity at Strong and Harris and the Peabody Sill. Low operating costs, $1.75 a pound copper equivalent. Again, a very nice looking project. Significant opportunity here, though, is two anomalies on either side of Strong and Harris and Peabody do not have any holes in them. So as you'll see, as we can look into our 2022 plans, the goal is to get some holes in those two anomalies and really understand if that opportunity grows in size. Again, the coming soon. So this is the focus of the management team and the operations team at Excelsior. It's permitting JCM leach pad and commencing copper production from those pits. Obviously, designing and planning of a raffinate neutralization plant is underway. First step in that is updating our 43-101, which updates the feasibility side of that project as well as the economics. And again, as I mentioned, that is the end of this year, 2021, first couple of weeks of 2022 is we look to announce that to the market. The PEA and Strong and Harris, again, that's out in the next couple of weeks. And again, 2022 is really understanding that Strong and Harris extension. We've got numerous other anomalies on our properties. And the goal is to really begin the process of getting those drilled and understanding what those opportunities do and do not do for our organization long term. And again, the longer term story, supplementing that 25 million year plant with JCM pits, using that to help develop our other assets. Again, the opportunity for internal cash generation is significant. Ramping up Gunnison to 125 million pound a year, still the number one focus of the organization. Bringing on Peabody, Sill, and Harris. And again, as Stephen mentioned, that 200 million pound per year copper equivalent, that's a significant opportunity and really what drives the management team to work towards that goal. And we have, as Stephen mentioned, we do have other exploration targets in other districts that we have understanding on, Cochise and Turquoise. Again, within trucking distance of our site, so very good opportunities in those to really round out our organization. I think at this point we run to the summary. Gunnison ISR, this is an innovative, significant advancement in the mining of copper. So it certainly comes with challenges, as we've mentioned, and we've been very open about in the market. And live those challenges in the wide open. But fundamentally, that innovative opportunity delivers ultra low costs and is a significant world leader in environmental stewardship. And again, I think that's a critical point as we go forward in the future of mining and in the future of U.S. production of copper. We're also perfectly positioned to fuel the growing green energy revolution. There's really no stopping it, and Excelsior really brings that key position to that world. Stephen also mentioned our significant and strong financial support, and our management team is certainly focused on delivering. And again, ultimately being able to discover and take the opportunity of brownfield and greenfield for organic growth is a great company story, and really drives the future long-term viability of Excelsior in the marketplace and in producing copper in southern Arizona. So I think that's a good transition to get to Q&A. Campbell,
yes, we have a few questions that have been sent. In. So, how many pounds of copper have been produced this year? We're doing some, I believe.
Yes, we're doing some. It's in the range of 800 to a million pounds.
What is the monthly cash burn, and do you think it will last without another capital raise being required?
Fundamentally, our cash burn is around about 1.2 million per month. And again, our opportunities on the Johnson Camp side, low capital intensity. As Stephen mentioned, our great relationship with Nabari offers opportunities to move that debt facility out. For those opportunities, along with the low capital, we're not expecting a significant capital raise. Again, we are investors like the bulk of the people on this call, and dilution is not something that we're looking to do in any significant way. So if the market allows those kind of opportunities in the future, we will certainly explore them. But at this point, we're looking to generate that capital internally.
If all goes as planned, when back of the napkin, when could you estimate you would be cash flow positive? Or can you answer that?
Stephen, is that something that you can
Sure. I mean, look, we can. I mean, there's a lot of moving parts, particularly with, Johnson Camp and the design and engineering of the raffinate neutralization plant. Our internal goal is to see us cash flow positive before the end of next year. There are opportunities to bring that forward, and Rob mentioned some of those which were related to some technology in the well field. That has a significant potential to solve a number of problems. Frankly, without additional capital. We're going to be talking more about those, in Q1 next year. We have to trial some of that technology in Q1 next year. It has the potential to be a bit of a game changer, but then, we don't want to put our eggs in that basket. So, we're continuing to move both the raffinate neutralization plant design forward, and we're continuing to move the Johnson Camp open pit restart forward. The value of the Johnson Camp open pit, particularly at these copper prices, is it does generate a strong cash flow. And that gives us then flexibility. If we can get that up and running for a lot less capital than the raffinate neutralization plant, then that's our focus. Hope that answered the question.
Okay. Are there newer areas mined subject to existing streaming contracts?
Some are and some aren't. So, for example, the bulk of the Strong and Harris and Peabody are not part of the streaming contract. But the copper that we would produce from the open pits around the SXEW plant, the JCM old pits, are subject to the stream.
Okay. Any comments on going forward general market awareness, investor relation programs?
Sorry, can you repeat that, Campbell?
You plan to ramp up investor relation anytime?
Absolutely. We've engaged a number of marketing firms. that we're spending, a big chunk of capital on that marketing. And it's sort of multi-channel marketing that we're doing. That's only fairly recently been kicked off. We haven't seen the results of that, come to market yet, so to speak. But we expect that you'll see a lot more activity, coming through November and on from November.
How is your cash on hand?
So, as the presentation mentioned, we finished end of June at close to $28 million, and we've been spending about $1.2 million approximately a month. So, you guys can do the math on that.
Again, do you have access to sufficient water?
Oh yes, yeah. So I mean, there's plenty of groundwater around. The challenge for the operations, Rob, maybe you can speak to that on delivering water to the operations for the rinsing.
So yeah, the challenge is really on the evaporation side of things. We'd have to build significant larger ponds to deal with the evaporation of that water. The SX mining and milling operation, it needs to be in balance. So every drop of water that you add needs to be pulled from the system and evaporated. So the infrastructure challenge is on the evaporation side of things more than the freshwater availability. That's really the limiting factor when it comes to availability of current flush. Hence the desire and the need to look at that raffinate neutralization operation.
Raffinate process require new permitting?
I do not believe so. No, it's envisioned in the long-term plan. There was a flush that came later in the project for recovery, returning the ore body to its natural state. So there is no extra permitting necessary for what a raffinate neutralization plant. It's fundamentally the front end of that longer envisioned flushing plant.
Any new permits required for the Johnson camp for renewed production, or you're covered?
We would need to amend and append our current permit for the Johnson camp side of things. Again, we have 3 fundamental permits that exist in our organization. We've got the UIC EPA permit for the well fields, and we've got an APP, which is an Arizona ADEQ permit for both sides. We've got one on the Gunnison side of things, and we got one on the Johnson camp side. So the Johnson camp would need an amendment process, and that's why we do not believe there's any significant risk to the permitting process or any material challenges that we'll face as we go down that path.
What would be the expected copper production rate in Q4 with this solution?
Again, the goal is to marry the projects together to get to that 25 million pound capacity. So the goal is to fill the capacity that we have in SXEW.
Okay. What equipment would have to be repurchased to mine the pits? Trucks, drills, loaders, anything? And what condition is the processing plant in? And how's staffing?
So there's a lot of questions there. So the first question is, we're currently envisioning a contract mine operation. Again, we want to have the flexibility to turn on and off that as we expand and grow Gunnison. So the contract mine solution is what we're pursuing. We absolutely will look at an owner-operator scenario. Again, we're looking for the best return on that investment. Staffing, there will likely be some staffing increases required as, again, we transition from this in situ side of things to a more traditional combination of in situ and open pit. So we will need some technical assistance, but we have some time to fill those roles. And again, being an exciting, growing company, I believe we have a good story to be able to grow a career. So that's our opportunity, is to really bring in some young talent and really grow this team that we have assembled, that you see on the picture on your screens.
Okay.
I'll do a couple of extra. Sorry, Campbell. So a part of that question was also the solvent extraction in W plant. We did a lot of upgrades to that back in 2018, going into 2019. That facility runs beautifully, produces 99.99% copper. There is zero extra capital or equipment required for any of the processing infrastructure.
Okay. Any update on sulfuric acid supply interruption from shutdown of Kennecott smelter?
Not that
So
we've
thankfully,
seen. Go on, Rob.
yeah, I can add a little color to that, Stephen. We've been able to do a lot of trading from early year opportunities. So we're well positioned now. Unfortunately, we'll likely see the brunt of that as the sulfur market has some significant headwinds coming into 2022. So there might be some price pressures in the future, but from a supply side, our earlier work this year has really paid off for these two issues from the Kennecott side of things, and also Vale's force majeure that happened in sometime in the summer from their strike. So again, we had an opportunity early in the year, and it's really paying dividends today with our supply side.
Do you do your experimentation for solving problems in the field, or have you set up a pilot plant simulating the field?
It is all in the field. Each experiment we do is taking production wells and learning those lessons on the actual well field. We do not have a pilot operation anywhere.
Can you tell us how the flow rates are performing against the originally modeled flow rates, rather than presenting them as increased flow rate percentages?
So fundamentally, the flow rates in Vision were in the mid 2,000 gallons a minute range, and operationally we're running in those we'll call them 600, 700 gallons a minute range. So again, just over 10%, and that's where those improvements have been. We were significantly lower at various times in this year through the challenges that CO2 have brought. But the recovery that we've been able to do has made those improvements, and that flow rate is certainly higher than it was at various points in 2021.
Great. I'm going to pass it over to Adam to ask some of his questions. Turn on your webcam, Adam. There you go.
Yeah. Thank you. Thank you, Campbell. Couple of quick questions for you guys. Talked a little bit about additional permits for Johnson Camp, for ore from Johnson Camp. I presume, you're talking about, and you mentioned contract mining. I presume you would be either crushing or stacking run-of-mine ore on new heap leach pads. You would need, there'd be some stripping. You'd need a spot for waste rock. What's the plan there as far as permits or any kind of remaining additional capacity that might be under any existing permits? And my recollection was that at Johnson Camp, when I was there last many years ago, that the historic heap leach pads are all unlined. So presumably you would need to construct new heap leach pads that are lined.
You've almost answered your own question. Absolutely. So the JCM pits getting into operation requires a new pad. So that new pad, we have plenty of space to put that new pad. There's a historic design and permitting process that allows us to speed that up to some degree. So absolutely, that is what the amendment that requires is adding that new pad to our existing permit. Current heaps do not work in Excelsior's way. They are not on our permit. So the additional permits are fundamentally all additions to what we have today. So there's air quality. There's understanding the remediation. Our waste pad it's actually to the just to the left of the Burrow pit that you see in that picture there, still has capacity. We do not have acid generating rock. So again, we're not seeing any of those significant hurdles that are required to get the amendments to the permits that we require.
Okay. And you guys mentioned several times this upside from Peabody Sill and Strong and Harris, and that it's copper, silver, and zinc, and that it's sulfide and oxide. So I'm a little confused on what the potential is there. If you've got oxide copper, certainly presumably you could, that maybe need additional permits, but that could be delivered to the heap leach pads that you plan to construct, maybe use the existing waste rock facilities that you guys have. But if it's mixed copper, zinc, silver in oxide, I'm a little confused how you plan on recovering the zinc and the silver, unless you're strictly talking about the sulfides. And if you're talking about the sulfides, then that's a whole nother process, and permits, et cetera, and required a mill and all that kind of stuff. So what's the concept there? You guys have seemed to, in my opinion, kind of glossed over that.
Well, you've almost answered a large part of that question for me, so I appreciate that. Is absolutely the oxide. The intention is the copper oxide would be treated on site. At that point in time, again, this is a long-term project, is that the SXEW would be expanded to the levels that are envisioned for Gunnison, that 125 million pound per annum level. And by adding some additional capacity there, you would be doing those oxides on site. The sulfide is absolutely going to require a small mill. And again, that's envisioned in the PEA that will be published in the next few weeks. So all those costs and how that looks will be spelled out a little more detail there. So yeah, the intention is the copper oxide treated within Excelsior's infrastructure, and the sulfide, which is deeper. And again, there's an underground portion of the mine once the pit's down to a level to get to that sulfide. So that's what drives the economics there, is a sulfide and getting that zinc and copper from that in a milled process. And again, the silver credits look to add some value to that process as well. But again, that's a long-term project, requires exploration drilling, and really requires us to build that project out. But exciting nonetheless, and with those two anomalies that are right beside it, again, it's a very enticing prospect for us.
Mm-hmm. And so, that maybe you could speak to, even though it's on your property, and you could use quite a bit of your existing infrastructure. Can you talk a bit about the time to fully engineer, to drill out, fully engineer, and permit these virgin ore bodies?
The virgin ore bodies, again, we are in a very spectacular part of southern Arizona that does not have significant environmental. We do not have any significant historical sites on our property. Endangered species, endangered flora and fauna are not on our property. So that offers a path. But again, we're still talking 5 to 10 years of project development to into an operational mine and workings.
Mm-hmm.
Yeah, Adam,
go ahead.
If I jump in there, it's like, so the Strong and Harris and the Peabody Sill, they're not like, I'm just being frank, they're not our major focus for any sort of immediate capital spend. There's some holes that we can drill next year, and we will drill next year, because there's the potential to double the size of that. as we said before, the focus is on Gunnison and getting that into production. Rob mentioned that, Strong and Harris and Peabody Seal is sort of 5 years away, and it is. You've got to do feasibility, you've got to do drilling, metallurgy, geotech, design, etc. It's an extremely valuable asset that wasn't in the public arena. And we'd been doing some work on it, and we brought it into the public arena. And it's the right thing to do because, our job is to create value for the shareholders, and we've got an asset there that's very valuable. And we wanted to get that out into the marketplace. But our focus is Gunnison, and our short-term focus is also the JCM pits to provide that cash flow, so that we don't have to keep going back to the market for money.
Could you guys talk about the remaining resource at the Johnson Camp, the remaining oxide resource at the Johnson Camp pits?
Rob, do you want to do that? Do you want me to do that?
Certainly, I can take that up. So again, we're still doing a lot of that work. So we're doing our mine design and our pit designs as we speak. But we're envisioning about 4 to 6 years of opportunity there to produce at that 25 million pound per year opportunity. And again, the operation allows that flexibility to really marry itself to the Gunnison production as that ramps up and successes are behind us in the well field. But those pits can really just supplement. But there's about 4 to 6 years at 25 million pounds that we're envisioning. And again, that will be worked into that 43-101 that comes out at the end of this year. As we're sharing that infrastructure right in the middle of that picture, the JCM pit operation has to be folded into the Gunnison 43-101.
Just to be clear, the 25 million pounds a year is what you're expecting from the JCM. I'm sorry, the Johnson Camp pits, or from the combined in situ and heap leach that you're expecting from the pits?
It would be the combined. So the plant capacity is 25 million pound per annum.
Right.
Again, the Gunnison projects envision 2 expansions of SXEW in the future, and those are what marries the Gunnison expansion plan.
Mm-hmm. And are there current resources and reserves outlined and published to support that plan, or is that something that's going to come out with a new plan?
So we gave some initial indication in our September release, but the 43-101 should spell that out in more detail.
Mm-hmm. Okay. Let me pass it back to Campbell. I know there's lots of questions from the audience that he'd like to get to.
And we're not going to be able to get to all of them, but I will pass on all the questions and comments that have been sent in to management with emails, and I would encourage you guys to correspond. Present total staff number again, including consultant?
We're in the 60-65 person count. Again, we've been able to manage a lower staffing level, which has certainly assisted in our thing, and our dedicated team has really been able to produce and work through the challenges that have been presented us.
What will the contract mine solution add to cash cost?
I don't believe we've done that work yet to be pronouncing that on this call. Stephen, do you have any comment on that?
No, that we're going to the updated 43-101 is going to include information on the Johnson Camp restart. There'll be numbers that we'll put out then, but until then, we don't want to get ahead of that.
Okay. What is the current state of the crushing infrastructure, and is any rehabilitation required to restart this infrastructure?
So our current vision is doing run of mine from the current pits. So the infrastructure on site is not envisioned to be in use, so no rehab necessary.
Is the cycling of water acid being automated?
it's as automated as pushing a couple buttons in a control room. So yeah, it's certainly been the focus of the operations team and our maintenance team, which have really delivered some impressive improvements to that infrastructure. As we started the year being able to deliver probably about a half to a third of what we're able to deliver today. So they've really shown their mettle. But yeah, the operation is run from a control room with some operator assistance for safety and compliance. And yeah, it's a very easy process to switch between the three operating modes.
Could you highlight a little bit more detail of the streaming agreement?
Can you take that, Steve?
I'll take that. So the streaming agreement is three-stage. So at £25 million per annum, it's 16.5% of our metal is sold to or provided to Triple Flag, for which they pay us 25% of spot price. As the operation expands, in its simplest form, if we double or triple the production capacity to 75 million pound, then the stream percentage is reduced by that factor. So if we triple production to 75 million, then we divide the 16.5 by 3. When we get to 125 million pound, we divide the 16.5 by 5. There's a lot of details in the stream agreement in our publicly available information, and you can also find a relatively unredacted full agreement on CEDAR if you want the details.
What are the proportions of ISR versus heap leach in 25 million pounds per year?
Well,
the answer to that would be determined. Again, as Gunnison ramps up, it would take copper units away from the pits and vice versa. So again, the goal is to fill the capacity of our SXEW operation and through the combine. So again, the pits have the opportunity to deliver that full 25 million pounds. But as we ramp up Gunnison, the intention it would be not that. So it's going to add years to the life of those pits, as needed or not needed. Again, it's a flexibility option that really is envisioned to deliver the capital requirements we need for next year in the early 2023.
What is the rough split on production from JCM versus Gunnison next 4 years?
Again, where the goal is to achieve that 25 million pound a year, and the JCM pits would be the additional or add-on, bolt-on, if you will, the Gunnison capacity. Our focus is getting Gunnison to 25 million pounds. So that is the opportunity that exists in the long-term plan. But those JCM pits offer us that ability to get that plant capacity to its top end and get to that generation of cash that is going to drive the needs of Gunnison and its expansion plans.
Okay.
Campbell, let me jump in on that one a little bit. It's a little bit of a moving target because getting Gunnison to 25 million pounds requires the raffinate neutralization plant. And so, like right now, particularly at these current share prices, the value for us and the shareholders is to, for less capital, bring the JCM pits on and generate that cash flow. And then, use that cash flow to build that neutralization plant. So that would mean that, certainly initially, the production is primarily from the JCM pits. But we'd like to bring that neutralization plant forward as much as humanly possible. And so, if we get access to capital, on good conditions and it's not, aggressively dilutive, then we'll fast track that neutralization plan. So, there's not a set number per se. The 43101 that will come out before the end of this year, the published document will probably be out early next year. We'll have, we'll demonstrate the relative production feeds based on that 43101 model. But, management is focused on bringing the Gunnison, forward as fast as humanly possible.
With a high enough copper price, then the buy down payment on the stream would theoretically be negative. In that case, would the lower stream percentage kick in automatically?
I haven't done the financial analysis on that. The lower stream percentage doesn't necessarily kick in automatically. There are certain rights and opportunities of both parties to manage that. So, for example, like you said, we have a buyback right on the stream, and they have a right to provide additional capital on the expansion. The stream percentage doesn't change from its current percentage until we do a major expansion on Gunnison.
What is the estimate timeline to build a neutralization plant?
I think, as Stephen alluded to that, there's capital requirements there, and ideally, it's as capital becomes available and is not dilutive, then the goal is to bring that forward. But at the present time, it's will be announced in that 43101. It's 18 plus months out. Again, there's a detailed design required, and getting that built, it's a pretty significant undertaking. But again, the goal is to generate that capital and bring that forward as much as humanly possible.
Can you talk a little bit more about your loan and thoughts on the rate, the paying?
Sure. And again, this information is in our annual information statement and on CEDAR. So the loan matures. It's a $15 million loan facility. There's a lump sum payment due at the end of, towards the end of March next year. And we're in discussions to move that out a couple of years on similar terms, and or refinance that with another organisation. So we're pretty confident we can do either of those things.
Okay. Start wrapping up here. What is the current acid copper consumption rate? Is that higher or lower than was expected?
It's about in line.
I believe it. Yeah, it's in line, and maybe slightly lower overall. As again, the feasibility had a lot of consumption of calcite in the early days of operation, and we've seen better copper recovery at the front end. Not to say that calcite hasn't certainly been the number one challenge we face, but the acid consumption combination to copper is fallen in line, and again, likely earlier than envisioned on the feasibility.
Okay. Have you thought of reverse osmosis instead of evaporation?
That technology does exist. There are certainly challenges that brings to the thing, and does require some significant capital and operating costs improvements. And again, the evaporative process in southern Arizona is world class and not seen in most mining companies. Would love the evaporation capacity that we have here in southern Arizona.
All right, last question. What are the expected recoveries on the run-of-mine heap leach on either a total copper or acid-soluble copper basis?
I'm going to allow Stephen to answer that one, as there's some sensitivities on timing on that one.
Yeah. So, and also, like, there is publicly available information on these open pits. Nord Resources, the prior owner, had a 43101 out. The acid consumption, the acid consumption and the acid soluble recoveries for run-of-mine are in line with the previous information that Nord put out there. They had some challenges with their total copper, but the acid soluble numbers are in line with that. We're using the historical met tests, and there were some sort of met tests that were done in 2013 that were very extensive, and we're using that information, but it's in line with the prior Nord 43101. That information will be available in the 43101, but it's consistent with standard Arizona copper oxide operations. From a run of mine, you're looking at around about 80% acid soluble copper recovery.
Okay. Want to thank everyone for tuning in. Please share your feedback. Didn't get all the questions, but I'll send them into management and go from there. The replay will be available in about an hour and a half, and do share that and get the word out. Thank you, Robert. Thank you, Steve, and thank you, Adam. I'm going to turn it back to Steve to close us, and until we meet again. Thank you.
Thanks, Campbell. So look, we will try and get to those questions when Campbell sends them through. We'll, give us a little bit of time. We'll try to respond to all of those. We've had some challenges. We all know that. The management team are very focused and very dedicated. We believe we've found solutions to those challenges. They're going to take some time. The idea of bringing these JCM pits on, create, inverted quotes, bridge financing, is a great idea. And when you combine that with the other long-term potential and short-term potential on the project, there's massive value in the organisation. We believe that that over the next year or so, we're going to release that value and should see capital improvement in the stock, and that's our goal. We're conscious of dilution. I'm a major shareholder, or a significant shareholder as well, and so we're careful how we run our business financially. We're in a strong financial position, and we expect to have a really good year next year. So
thank you very much.
And we've got, and we'll make one other comment here. Like, we introduced Robert to the market, or to the audience here. We've got such depth in our management and our organisation, and that's why Robert's on the call, just to demonstrate that. He's doing a fantastic job down there as our operations leadership.
Great. Thank you very much. Thank you all for attending, and we'll talk soon. Thank you.
Thank you. Thanks, Cam.